Well, the volatility has continued for the stock market the last few weeks. We're moving higher today, barely now, but the Dow is still over 7% off its record close set back October 9th. No end to the volatility in sight to this point. So the question is it time to become defensive with your portfolio? Both of our mavens sort of feel that way today. Russ Kestrich is one of them. He's head of investment strategy at Barclays Global Investors. And Drew Kanaly is the chairman of Kanaly Trust Company. John Hilsenrath of the Journal is with me on this as well. What about you, Drew?
Well, we're not quite that concerned. I mean, we just finished a GDP number that was 3.9%. Now, if you take out housing, 95% of the economy was up over 5%. So it's not like we're going to roll over tomorrow at all.
So, I mean, you're looking to the most recent GDP data as a comfort factor right now, huh?
Absolutely. I mean, you know, housing is one component of the economy, and at that, it's isolated to what? California, Nevada, Florida, and a handful of other locations. Otherwise, you know, the housing stock, and really, if you think about it, we just overbuilt houses. It's an oversupply issue still.
Okay. John?
Well, Drew, let's talk a little bit more about housing. Well, you know, it makes up a fairly narrow slice of economic output. It makes up a huge slice of the wealth of the nation, of household wealth. Doesn't that have knock-on effects on consumer spending that could create the next wave of this? I mean, after all, housing has been a leading indicator of economic cycles in the past. It wasn't in '01, but it was in '91 and the early '80s.
What you've had is a huge run-up in the stock of housing. So if we look at it over the last 12 months, 6 months, it doesn't look too bright, does it? But if you look at it 1 year, 2 year, 3 and 5 years back, people have tons of equity in their homes. So you have to look what the average experience is in housing, not just narrow segments in short periods of time.